So Troy, I've known you for over 10 years, and learning about options has been very interesting and educational for me. Before this, I couldn't tell you what an option was, really. But what I'm hearing is 1% return on investment every week, in 1 to 2 hours a week, and a 98% win rate. I want to understand how this is possible. Can you help everybody understand how you're getting these types of returns?
Here's the thing. I want people to be jaded. I want people to be skeptical. One of the things that we tell our students all the time is that you need to start slow and you need to let the framework prove itself to you. So when you're concerned that it sounds too good to be true, I get it. I felt the same way. And when I first started trading this, and I went out to find something that could be more conservative. I had done some really risky stuff. I had done crypto trading for quite a while, and I did really well with crypto. I did really well. I was doing grid trading on Ethereum, and I was doing Bitcoin trades, and I was doing a bunch of other altcoin stuff, and I did quite well. But I got lucky too. And the reason I got lucky is because right before the major collapse of FTX, I had a lot of money. A lot of money sitting on the exchange at FTX, and I was trading grid Ethereum, and I would have 3 and 4 Ethereum, 5 Ethereum, sometimes 10 and 20 Ethereum at a single grid line, and this whole big trade. And so I had all of this money sitting on the exchange, because when you're doing limit orders, you've got to have the money there on the exchange. And in crypto, that's pretty risky, right? Because you're giving up your keys and your money to somebody else, and if something goes wrong, then you lose it, right? Well, about a week before FTX collapsed, I just got a gut feeling. I'm like, man, I am just not feeling comfortable at how much money I have sitting there on the exchange. And so I ended up pulling almost all of it off. And I think I still had about $5,000 that I left there, and I lost all of that. That when FTX collapsed, I lost every penny of that $5,000, but I would have lost so much more. And so in that sense, I really feel like I kind of got lucky with that, right? It was just a timing thing, call it a gut feeling, and it worked out right. But trust me, I've had many of them that didn't work out so right as well. But that one worked out in my favor. But it's what got me into stock trading first before I got into options, because after going through that and that close call and nearly losing everything, it would have wiped out everything I'd done from years in trading had that money still been on the exchange when FTX went under. So that was really like a cold shower for me, right? And so I started trading stocks instead. I'm like, I like this trading thing. I'm having fun with it. I'm doing good with it. And if I can read a chart on crypto, then hey, I can trade stocks, right? It's all the same thing. Trading is trading is trading. Yeah, not so much. And I learned that as well, because it's different, right? First of all, crypto trades 24/7, and it never stops. The market never goes off. And so there's all kinds of weird kind of cyclic patterns that occur with stock trading when, the market opens at 9:30 and closes at 4 p.m. on New York time, and everything has a little different rhythm, a different cadence to it. And stocks are not nearly as volatile as crypto. So you don't have the same type of trading patterns and chart patterns. And, you can sit there and say, yeah, it's the same thing. Charts are charts are charts, and trading is trading is trading. And in some ways you're correct, but there's so much nuance to the marketplace that it was really different. And I got to tell you, I struggled a lot when I first got into trading in the stock market. And I did okay, but it wasn't anything that was sustainable in terms of, being able to say, hey, look, I'm just going to be a trader now. I'm going to put this other stuff aside and focus on my trading. I couldn't get it consistent enough. And I tried pretty much everything you can think of. I started out just doing simple stock swing trading, and that was doing okay, but it was just so slow. It was so slow. I wasn't making nearly enough money. You had to have a lot of money. Now, in crypto, you can use leverage and things, but with stocks, you don't have that. So you have to put a lot of money into your account in order to get somewhere. And so I didn't, get far enough to really stick with that very long. And I tried some other things. I tried shorting stocks. I followed this guy for a while that all he did was short. And, that was similar. I had some successes. I had some wins, but it was just too long. These swing trades might might go, 3, 4, 6 weeks or so. And that wasn't making enough money that I could even remotely contemplate stopping working or building up my retirement fast enough to get somewhere, right? And so I just continued to experiment, and I started getting into options trading. And I would like to say that I learned things the smart way, but the truth of the matter is I just jacked a whole lot of stuff up and screwed it up a lot of times over until I learned, right? And sometimes that's the best teacher, right? Failure. And I didn't fail at it per se, but I lost a lot of money trying and developing and getting to the point where I was successful. So I did SPY day trading on the 1-minute chart, and I got that to a point where I was profitable with it. I was making anywhere from $25,000, maybe $30,000 a month doing it, but it was not the lifestyle I wanted. Man, I would be on that chart from before market open until market closed every day, staring at the charts on the computer all day long, watching the charts drip 1 minute at a time. And you know what? I got to tell you something. I'm diabetic, so I wear a CGM here, and I could get alerts while I was trading. Like, the day trading is not good for your health. I'm telling you, I have empirical evidence to that, because you could listen to the chimes and the alerts going off on my CGM as the cortisol and glucose levels would spike because of the stress of having tens of thousands in the middle of a trade and literally sitting there with your finger on the button waiting to execute, because the whole trade only lasts 6 or 7 minutes. And one mistimed adventure, and you go from making $800 or $1,000 to losing $5,000 or $6,000, right? And so, was I successful at it? I guess so. I mean, I got my win rate up to about 68%, which isn't too bad. It's not too shabby. Most really good day traders are going to be hitting like 70, 72%. So, I mean, I wasn't in that elite status by any stretch of the imagination, but I was profitable and I could do it full time. And if I had to, I could make a living at it. But it wasn't the kind of living I wanted. The stress was just too much. And, the alarms would go off. I'd have to stop and do a bunch of squats or drop down to the floor and do some push-ups to get the blood pumping again and lower the glucose levels, and it was just not fun. I had to have stuff mounted in the bathroom so I could, when I was in the restroom, that I could put my computer there and see it on the screen, because I couldn't walk away from the trades, right? It was too much money, risk involved. And so after doing that for a while, I'm like, this just isn't for me. There's too much stress. And it's not going to work. And I reached out to a really good friend of mine, a mentor of mine. I've known him for many years, and in fact, he was a client of mine in one of these, at a former business that I had. And so I knew him well, and I knew that he was a successful 7-figure trader. And so I reached out to him, and he got me kind of going on this strategy of, selling the wheel strategy. And I really liked it, right? And I really liked it because it was something that only took a few hours a week, took about 3 or 4 hours a week, so it wasn't too bad. And it had the same win rate that we have, that 98% win rate. And this, by the way, is not our statistic. It's not even his statistic. It's really an industry-wide statistic. If you're primarily selling puts as your entry for your trading strategy, then it is about a 98% win rate. And it's important for you to understand that's not a claim that we make. That's pretty much an industry-wide knowledge when you're selling puts. And the reason that it's such a high win rate is just quite simple, that most of the time the market's generally going to go up, and over time you can just continue to extend those trades until they're profitable. And the truth of the matter is that unless the stock company itself goes out of business, right? So unless the company completely goes off the ticker, then you can continue in that trade, in that position. You can continue patiently with discipline to make money from it. And that's why they say it's about a 98% win rate, because, most of the time the stocks that we're trading are not going to go out of business. It happens. And I can't say that it's not possible. Of course it can, but it's very, very rare. So, it had these two premises that I really liked, right? It had a really high win rate, and it had a fairly low time commitment, 3 or 4 hours a week. But here was the problem. It just didn't make enough money for me. I needed to make up for lost time. Maybe that makes sense to you, but I needed to make up for lost time. I had made the worst mistake you can possibly make. Earlier in my life, I went into after the .com era, and I did really well in that. I had a really good retirement. I had over $335,000 in a retirement plan in my late 20s and was doing really, really good, and was pretty much set for life had I just not screwed it up. And quite honestly, I did the worst thing you can possibly do. I took that and I cashed it out. Yeah, I know, it's painful to say. I cashed it out. What's really funny about it is I don't really remember the $335,000. I remember the check I had to write to the IRS, which was $33,500. And that's because you have a 10% penalty when you withdraw from your retirement plan, right? And so I definitely remember that painfully large check. And I did that because I was in business with my brothers and I wanted to invest in our construction company. And my older brother just kept kind of lording it over me that he didn't have a retirement plan to fall back on. And he was all in and I was cushy with this retirement thing. And it just went on for years in business until I just had enough. I got fed up with it and I cashed out my retirement, threw every penny into the business. Well, if you can fast forward a little bit, you know how 2008, 2009 turned out for land development and construction, right? Yeah, trust me, I know, because I had 14 companies in land development and construction and cabinet shops and all of that. I was a licensed contractor in California and in Oregon as well, and we lost all of it. And when I say lost it all, I mean, I was too broke to even afford to go bankrupt. I couldn't even afford bankruptcy, right? And so that's, a very painful realization for me of having to make up for lost time. I did something later that, don't do this. Please don't do this. I went back and I calculated out how much that $335,000 retirement plan would have been worth today had I just not touched it. Had I just left it alone and never traded it, never added any more to it, just left it alone, left it appreciate, right? And I did this, it was probably about 2 years ago now when I did that. But when I ran the numbers at that point, it's probably a lot higher now. And I'm not going to do it again, I'll tell you that. I'm not going to actualize those numbers. But when I did that and did the calculations, because I had the old statements and I knew what tickers I was trading and all that, it would have been about $6 or $8 million today. And that mistake is what I refer to as a 20-year mistake and maybe a lifetime mistake. And what I mean by that is that in order to make up for it, it takes 20 years of doing everything right to make up for that 6 or 8 million. And so I know that to be painfully true because as aggressive and concerted as I've been on building my retirement now, I'm still not back to that 6 or 8 million level, right? So I still haven't recuperated that loss. So, when I was looking at this, yes, it had those two cornerstones, right? It had the low time commitment, 3 or 4 hours a week. That was great. It wasn't day trading. And the wheel strategy delivered on that promise. And it really delivered on the promise of the win rate, a 98% win rate. That was a great thing. But, it failed that last test for me. It just didn't make enough profit. I mean, I think wheel traders an average, and it depends. Everything, it depends, right? So your mileage will vary. But generally, wheel traders make 20, 30% a year, which is great, right? It's a great income, don't get me wrong, but I had to move faster than that. I had to make up for all this lost time. I had to make up for losing everything. I had to make up for going through the 2008 collapse. And so it just wasn't enough to get me excited. I looked at it, and even if I had like a $250,000 portfolio, right? Even if I had that much money to put in, what was I going to make? Like $40,000 a year, something like that, right? Maybe $45,000 a year. And I looked at that and it's like, man, that's going to take a long time to get where I need to get. And so I was really grateful to my friend for showing it to me and learning it. But at the same time, I was frustrated, right? Because I just couldn't get to where I needed to go. And so, I went down another path, and I just started to do a lot of iterative testing. My background, although I never completed nuke school, I went through the Navy nuclear propulsion program. They pulled me out because I ended up getting a ROTC scholarship midway through, so I never really completed that. My military service was really cut short in many ways, but I enjoyed what I did in the military. It means a great deal to me to have served, even though in just such an insignificant way. But I learned a lot in nuke school. I learned a lot about just pushing through, right? And iterative testing over and over and over and over again. And so that's what I began to do. And I'm like, okay, this has got 2 out of the 3 criteria for me, right? But it's just missing that third one. And that's where over time I came up with this approach of just targeting 1% a week. And, that is what the 3 components of this framework are about. So, I know that many people say this sounds too good to be true. I know that's your question, that's your premise. And in many ways, I kind of feel that way too, right? And, I look at starting this journey with just a $10,000 account in October of 22, and I'm sitting here today trading a multi-million-dollar account. Now, that account didn't grow just on its own. All right. I want to be very clear about that. I followed the framework that we teach, and we teach you to add money into your account when you can. If you're still working and you're still generating income, it's easier to make more money if you have more money in the account, right? So part of what we teach is contributions to your account and funding it. And I've continued to do that. And I'm blessed that I have multiple different companies, so I'm able to put, good significant amounts of money in every week, and I've continued to do that. But it feels a little too good to be true for me as well, to look back in just 3 years, making that massive of a shift in my account. But at this point, we have over 3,000 students that have gone through this framework. And, on average with our students, right? Like you can't really use these generic guarantees or anything, because there's not. But the target is 1%. That's what we shoot for when we trade this. And, there's people that don't do anything. You all know that. I don't want you to be that person. I can sincerely tell you that if you're not going to be somebody that's actively putting in the work in this course, not only are you not going to get any results, but I don't want you to buy it. I truly don't want you to buy it. Save your money, go invest with somebody else, do something different, because I'm really not about making this, sale with you. That's not what this is about. It's about you getting results, because I know that when you come in and follow it and you get results, like the thousands of students that we have in the program, then you'll tell your sister, your brother, your mom and dad, your niece, your nephew, and that's how we've grown. That's how we've grown so quickly, is that people come in and they get results. And, if you look up on Trustpilot, look at the reviews, you'll hear people talking about the life-changing results that they've gotten out of this, and that 1% is a realistic goal. And I'm gonna tell you right now, we don't make 1% every week. Be really candid about that. That is not a claim we ever make. We never guarantee that you're going to make 1% a week. We can't guarantee anything. I can't guarantee you're even going to wake up tomorrow, right? So don't misinterpret the words here. The target that we shoot for is 1% a week. And it happens that a lot of those weeks you are going to hit that. And during the course of a year, you'll generally, exceed that 1% on average when you average out the weeks. But you'll look at, even on the sales page, I show examples where I went like 21 out of 22 weeks in a row and didn't hit 1%. Right? So you'll have periods when the market doesn't cooperate and then you make less than that 1%. But it's still the target. It's still the goal that we strive for. And generally we're able to hit those numbers. So, is it too good to be true? Here's what I ask. You should be skeptical. Right? You should be reserved. There's a lot of crap out there in the financial marketplace that has made all kinds of promises that they don't deliver on. What I would say is go check us out on Trustpilot. Like, look at what people have had. And by the way, when Trustpilot, when somebody leaves a review, they ask them to prove that they bought the course from us. They have to provide their receipt and everything else, because we have so many good reviews there that they are thinking, well, this sounds a little too good to be true, and they force our students to show proof that they bought the training from us. And I think that's awesome. I'm glad they do that. I'm quite glad that they do it, right? Because it makes it realistic. But you have to ask yourself, like, being jaded and skeptical is good, right? That's a good thing. But if you're not willing to be wrong, if you're not willing to give it a shot and prove it to be right or wrong to yourself, for you, then absolutely you should not, go forward with this, because you have to be willing to be wrong. You can be skeptical, you can be jaded, you can be reserved, you can start really slow, which is how we recommend. It doesn't matter how big of a portfolio you start with. We tell you to start very simple with just a single trade and just trade one position at a time for a while until you're comfortable with it. Let it prove itself to you, right? And that's what, I think that's the only thing I could ask from anybody, because that's what I did. That's absolutely what I did. I started with a $10,000 account and I went slow and I proved it to myself before I started adding more funds and going bigger with the account. And that's how this framework was developed. So in that sense, yes, I get it. It feels too good to be true. But I think when you get in and dip your toes in the water and start seeing it for yourself, you'll see why we have such a raving community behind it.
Hey, Troy here. Look, if you're tired of the stress and uncertainty that comes with traditional investing, I've created a free masterclass series that shows you a better way. It's so low stress you can do it in 1 to 2 hours per week, so low risk the government allows you to trade it even in custodial retirement accounts for children, and so effective it targets up to 68% returns per year. Click the link below to sign up and learn how the strategy really works.